Welcome to the Cypher pattern lesson. In this lesson we're going to talk about the Cypher pattern. It's a relatively new harmonic pattern, probably been around, I'd say less than 10 years, probably less than 5 years to tell you the truth. So it's a pretty new harmonic pattern, but that doesn't mean that it's not valid. So in this lesson we're going to talk about the history of it. We'll outline the movements and the structures in this pattern. I'm going to show you a live example of it, so how it'll work in the real markets. And then I'm also going to discuss the entry and exit strategies for this. Okay, so let's dive right into this. This is a different pattern than we've seen before with other harmonic patterns. It's neither a retracement nor an extension pattern. So it's kind of its own little breed here. Typically the BC leg is one that is not very important, but it will be important in this one. So let's dive right into it. Okay, so on the left you got your bullish, and on the right you got your bearish. We got our standard XA leg. So if you've traded the BAT or the Gartley before, it's going to be that same kind of impulse leg. Essentially we're just looking for a strong move in one direction. So whether it be up or down, it doesn't matter. The difference between this pattern and the Gartley or the BAT pattern is that, this initial leg no longer holds up the pattern. We're actually going to have a movement outside this initial leg. And I'm going to show you that here in a second. So we just need that initial impulse move. So a trend, whatever it is, a short-term trend, we just need a leg that that looks like an impulse move. We then get our A to B retracement. Now, if you traded the BAT or the Gartley, this looks pretty standard to you, right? You could be either a BAT or a Gartley here. We're looking for a 382 retracement, so it must at least touch. Okay, so it doesn't have to close below it or above it, but it has to at least touch the 382, and it cannot close below the 618. Okay, so we have to at least touch the 382, but it can't close below the 618 level. Okay, so essentially we're looking for anything in that little 382 to 618 zone is a good point for our B point. And here is where we get a kind of a big difference from the BAT and the Gartley. Boom. We're outside the A point on this one. So we're looking for a 127 to a 141 X to A extension. Now when we get to the live pattern, I'm going to show you what I mean. So we're actually going to violate the A point here. Okay, so price, the big thing in here, that is price cannot close. It can exceed it in a wick, but it cannot close above the 141 extension. All right, so I'll explain that a little bit more when we get into that live pattern here in a minute, but cannot close above the 141. So at the end of this leg, be on the lookout for an ABCD pattern. Sometimes a perfect ABCD sets up here, because as you can see, the X to A to B, B to C could be a perfect ABCD pattern right there. All right, so while an ABCD calls for the 618 to the 786 on the B point, and we could get the 618 here. So if it touches the 618 and closes below, you would still have technically an ABCD pattern, but we wouldn't have the Cypher. Okay, so be on the lookout for that. And then we're going to close here. The main thing we're looking for is the X to C. You see how we used to go X to A and find the retracement on that, but now we're going all the way the full length of this pattern. We're going X to C, and this is where you kind of get that retracement element of this pattern, because our D point is confined within the overall pattern, but it's not within, we're not using the X to A leg to find that D point. So we're going to use X to C, and we're going to use the 786 retracement of the X to C, and then we're also going to look for the 127 to the 2.0 of the A to B. Okay, so we're going to look for the extension from A to B of a 127 to a 2.0. Okay, so just remember the one thing on this, the main thing that sets up our D point here is the 786 of the X to C. Okay, the 127 to 2.0, that's a very good thing if we can get it right there. But the 127 or the 786, I'm sorry, of the X to C is the main point here that we're trying to hit. Okay, so let's zoom in on this so I can hammer this home just a little bit more, because it's really that important. We're in the PRZ zone, so the area that we are actually going to take the trade, right? So we get the 127 to the 2.0. It could be stacked above it, it could be stacked below it, but we're going to define here our stops and our targets as well. So we get price that moves into this level, right? boom, D point comes in here, touches that 786. So we're going to place our limits at the 786 XC. Okay, hopefully we get a 127 to 2.0 that lines up right there. A Fibonacci ratio right in there that fits, so we have some confluence right there. So hopefully, boom, we come out, right? It's a profitable trade. So where do we set our stops? Our stops, just like we've used in previous patterns, or if you've traded previous patterns before, the retracement style, we always put it below the X point. So our stop area is just below the X point, depending on what time frame you're trading. Depends on how many pips below that you're going to do. So daily, you're going to give it a little bit more area because our daily range is gonna have a little bit more movement versus maybe a 5-minute. You may have a little bit of a tighter stop, right? So it all depends on what time frame we're trading right there. Okay, and then our targets here, we're going to go the 382 and the 618 of the CD move. And this will be a little bit easier to visualize when we get into that live pattern. So let's just jump into that live pattern right now. Okay, so now we can see the actual market here. We're going to use the Aussie dollar Swiss franc here, and I'm going to give you a few seconds to try to find this again, and then we're going to get started here. But it's dead center for you, so hopefully you can find it. The hard part for you is probably going to be finding, because the C point is outside the A point on this, so it becomes a little bit more difficult to find in the beginning, but we can manage, believe me, especially since the ABCD is confined within that first overall move. It kind of gets easier to find that way. Okay, so let's outline it first, and then we're going to talk about it here. So I'm going to fatten this up for you. I don't know why I use purple so much, but I like it. It's just easy to see. It's a different color. Okay. And then we get the, didn't get my move here. So we had the X to A to B, B to C. Look at that. That could be a perfect ABCD right there. We'll check that out here in a second. And then, so we have B to C and C to D. Okay, let's check this. Let's see how close this is. Pretty darn close. Really close, actually. So that's pretty close to an ABCD, which is probably why we got a little bit of a move up there to the top. And then let's just check. We're going to walk through this and make sure all of our ratios are correct. And then we're going to trade it. Okay, so we have our impulse leg, right? Again, impulse just needs to be a strong move. We have strong enough move right there. We're good. All right, so we need to figure out our B point. Now, if you remember, the B point is what? Yeah, right. 382 up to the 618. So it has to at least touch the 382, and it can't close on this one. It cannot close above the 618. It can go up and touch whatever it wants to do up here, but it can't close above that. So we're good. The B point, we are good in that one. So let's just go ahead and label this. I'm going to put it in that. So we got X on that to A to B. All right, now our C point. The main thing here is we are looking for a 127 to a 141 of the X to A, and we cannot close on this one below the 141. So let's get our expansion tool, our fib expansion. We're going to go boom, down, and we're coming right back up to expand. And we're good. 127 to 141. We're right in that area. We're good to go. All right, so we're good on that one. So we can label our C point. So the C point is good to go on that. And now we need D. And the most important part on this one is the 786 of the X to C move. So we are going to do a retracement, and then we're going to come back and we're going to do an expansion. We are good on that one, right? So I mean, man, that thing just nicks it right there. You're perfect. I mean, that if you put your limit there, I mean, you would have never been down in the trade, which is by sheer luck, because it never being down in a trade is almost impossible. But we nailed that right to the pip. Okay, so boom, we're valid right there. Let's just go ahead and put a ray in right there. Gotta make it purple. And we're good to go. Boom. We just barely nicked that. All right. And then we're also, on this one, we look for the 127 to the 2.0. Remember, this is not nearly as important. Right there. Back down. And right there. Boom. Confluence is perfect right there. So I still would have put my entry at the 786. If you would have put it at the 127, trying to get a little bit more, you probably would have missed it by about a pip and a half. So that's why the 786 is more important. So we're good. Okay. Now let's trade this. So we put our stops outside the X, and this is the only part of this pattern that I don't like. Why? Because when we had a 786 retracement, right, of an X to A, that means our 786 comes up here, which means that we have a longer or a much higher risk to reward. But when our entry comes in so low and we have so much room in here to have, you know, jostling, but we have a much wider stop, well, then we don't really get as high of a risk reward. And that's really the only thing I hate about this pattern. It's a great pattern. It's valid. It's consistent. I mean, it's been proven. I mean, you can look up the statistics on it. You can see it. I don't have to sell you on it. It's not, you know, you can argue with me on it, but the stats show what it is. It just, you know, I hate the fact that it comes in so low. Doesn't mean I won't trade it. Of course I'll trade it. I trade anything valid. Why? Because I'm all about statistics. And if it's going to prove over a certain period of time to be better, then I'm going to trade it. Because I like money more than I like my pride. Okay, so we have our entry. Boom. We have our stop just outside the X point. And we have our 382 and our 618. Let's do a short position. We're good. Boom. We're right there. Let's pull that back down. First target is 1.27 on the risk reward, so we're about 1.25 to risk reward, and then the second one is about a perfect 2-to-1 risk reward. So really, it's not that bad. If you win more than 50% of your trades on these, you're good to go. Which is, you know, these harmonic patterns can be way higher than that. So as long as you're, you know, sticking to your rules. I guess I should label the D point. I just forgot that. As long as you're sticking to your rules, there should be no reason you're losing money here. Okay, so let's trade it. When we come back up in, I put my limit right there. Boom, triggered in. So I'm sitting, boom. I hit my first target, right? Okay, automatically I roll those stops to break even. Now, you can roll it just in front if you want. Depending on what your spread is, you know, that's completely up to you. You can roll it right on top. I mean, that's personal preference right there. But either way, I'm rolling it so I don't, I'm not going to lose anything else. This is risk-free. And lucky for us, the next one down, boom, we touched it. So as a winner, you know, we hit both of our targets and we move on from there. But the main thing here is that we have the 786 of the XC move. We put our stops outside the X for a little bit of support, and then we also roll our stops once we hit our first target. Okay, and the reason we roll again is so that we lock in profit. We never want to give anything away. Okay, so let's say we hit this first target and boom, this spike comes up without, you know, maybe our 618's down here. So the spike comes up and stops us out. And that's fine with me. I won. I got one position off, and then I'm sitting here with my second position. So what? I get stopped out for a break-even trade. That doesn't bother me one bit. Why? Because I'm not losing. That was a winning trade to me, that I won. I got money in my pocket right there, and that's what I'm trying to do, lining my pockets with money. So make sure you follow these rules, and I promise this pattern is going to work for you. Let's summarize the key points here. The first thing is the X to C. We're going to look for a perfect ABCD, because if we get that 618 retracement in the B point, we could actually set up a perfect ABCD, which would be two patterns confined within one, which is a perfect way. We could trade it both ways. To reach the C point, we must violate the A point, which is a little different than we've seen before, and we're looking for an extension of the 127 to 141 XA, and then the D point retracement comes in at the 786 of the XC leg. Okay, so make sure you go all the way up to the C point. Don't do the XA, do the X to C leg. Okay,